What's up, guys? Feed you information here. If you're a new viewer, I am an informative channel with a personality. So I want to talk about Nvidia today, and the reason we're talking about it is because they're trading at 37.92. That is the lowest that they have traded at with a price to earnings margin since May of 2017, so nearly a year ago. We're about to go into March, which is going to be the third month. So that's roughly 10 months. The reason for this is because he believes, and this article is by Ryan McQuinney, he's on Zacks. He believes that it is because a lot of analysts, here, I'll go ahead and just read this. Nevertheless, Nvidia remains a speculative growth stock with high sky valuations. Nvidia is currently trading with a PE ratio of 38.2, coming in significantly higher than the broader market average, as well as the 15.8. I apologize, so 38.2. It's still low though. Displayed by its semiconductor general and industry peers. To those skeptical of rising valuations in the sector, Nvidia's high PE is just another example of the bubble forming around tech stocks right now. Believers in Nvidia's future, on the other hand, argue that investors simply have to pay a premium for companies with potential to lead humanity in the next great technological age. I'm one of those believers. This company they just keep saying they're going to do it, and then they do it. One thing that nearly everyone can agree on is that Nvidia is quite the unique company. Prudent investors are correct to compare the stock to the others around it. But the uniqueness of the situation might also demand special consideration. In other words, investors looking to determine whether Nvidia is cheap or expensive might be best served by comparing the stock to itself. Nvidia was battered by the late January sell-off, but shares have recovered quite nicely. That means that the cause of the lower PE is also an improved analyst outlook and rising earnings estimate within the last 60 days. So what they're basically saying is a lot of analysts and just investors in general are like, okay, the stock is actually a lot cheaper, and their growth is more recognizable now. We have seen 12 revisions with 100% agreement to the upside for Nvidia's fiscal 2019 earnings estimate. So basically, after this year, 2019 should be insane, they think. Over that same time frame, the Zacks consensus estimate for that fiscal period, which ends in January 2019, has gained a staggering $1.56. So that's their EPS for the year, their earnings per share. Nvidia is now expected to witness adjusted full-year earnings of $6.34 per share in fiscal 2019, which is insane, which would represent growth of nearly 29% on a year-over-year basis. This strong revision activity has helped Nvidia earn a Zacks ranked #1 strong buy. I'm almost convinced it is a great stock. I'll be covering it more in a future video. If you enjoyed the video, please leave a like. Make sure to subscribe. Got tons of content coming. And thank you so much for watching. Feeding you information